What's going on, guys? Welcome to another episode of the Bayou Mortgage Guy podcast. I am your host, Ben Nyhart, and I have a very special guest here with me today. I've known this gentleman. We both entered the mortgage industry around 2017. We worked together for a couple years, and he is a branch manager, right? You still a branch manager, or are you higher up now? I don't even know. Branch manager at Nations Lending right outside Houston. This is Lance LaGarce. Lance, thank you for coming on, brother. I appreciate you. Why don't you tell everybody who the hell is Lance LaGarce?
Hey, man. Well, appreciate having me. So, yes, as been said, we joined the industry at the same time. Interesting time. So, 2017, I was actually in oil and gas. Graduated engineer, got to oil and gas, was working as a petrophysicist for 4 years. Bought a home and honestly found the process very interesting. Just didn't understand anything, right? There's no education in our educational system when it comes to mortgage or anything basic finance, it seems. So, digging into it, really enjoyed it, went kind of down a rabbit hole of wanting to learn more. The Big Short by Michael Lewis, which turned out to be a Hollywood film. That book convinced me to take mortgage classes, got the classes, got licensed, and ended up kind of working part-time while I was in oil and gas, doing some refis through somebody else. And then I actually made the jump, full transition, jumped into it 2017 and haven't looked back since. Currently married, graduated U of H, been in Spring, Northside Houston my entire life. This is all I know, all I've ever known. 2 kids, 6-year-old girl, 1-year-old boy. And they're, just having kids will definitely change your mindset on business, right? And when that girl came was right before COVID, and it changed my entire philosophy of how I wanted to actually just work ethic and what I wanted to build and create for them. And the great thing about our industry is it gives that ability. It's it can help you kind of make that generational shift of wealth by owning a home and teaching people how to own a home. But basically, Nations Lending is all I've known. It's been my home since 2017. About 2019, kind of started to build up a team. Currently have 6 LOs with me, and we're, grinding. It's been we just came off a tough year, and expectations for this year are awesome. But that's kind of who I am, what I do.
Yep. Yeah, no, dude, that was perfect, man. So, so we were talking a little bit before the show started, and we were talking about how I met you before. I worked at Nations for a couple of years, and we were at a little mastermind with some other LOs in 2017. And I didn't know much about the business back then, and I don't think you did either. And we were in a room full of pretty brand new LOs in that room, but it's crazy looking back at that, like how many like really rock star loan officers came out of that room.
Right.
Because you've got yourself, Andrew Cady was in that group, Jordan, myself. I mean, there was some really big Ben Sutton. I forget. I mean, dude, it's crazy to think back. Like, it's how much has changed in 7 years, dude. Like, this business for me, and I know for you as well, it can change your life. And it's a grind at times, but I know you enjoy it and I enjoy it. I think we enjoy it for different reasons, but we both enjoy it, and that's part of, the allure of this business. And
Absolutely.
I wanted to just kind of touch on, you mentioned like the education for mortgage. There is none, dude. Like, you can't really obviously find a course in school for it or college or anything like that. So I think that, that LO, it's our responsibility as loan officers and mortgage professionals to educate people. And that's kind of why I'm making this podcast. I'm really like passionate about making sure people know what's going on in the industry. And that comes from mortgage to real estate to, insurance to taxes, all the things that are incorporated with buying a house. Which right now, the biggest thing is, in real estate right now, and I know you're in East Texas, I'm in North Alabama, I also have a branch in South Louisiana, is inventory. So tell me a little bit about like, what's the market like in East Texas, dude? What's going on there?
Fair enough. So Texas specifically is seeing a net influx of transplants. I think the work from home movement we're still on the cusp of it, right? This this is still something that's evolving and is changing and disrupting a lot of industries. So we've seen ever since, COVID and kind of everything getting back into the swing of it, middle of 2020, we started seeing a lot of relocations, right? Because now a individual has the opportunity to leave a high cost area and maintain the same job role and go live anywhere. So, Florida, Texas, several other states, Tennessee, right, is seeing a net influx of individuals who can now live there and work remotely. So that's what we've seen a lot of, which of course puts a kind of brings in that demand, but supply is still not there to kind of eat up that demand. You couple that with the fact that nearly every homeowner who I wrote a loan for in 17 through 19, we've refinanced them at least once or twice.
Yep.
That's the general rule, for everybody who had a mortgage, they refinance. And when you were refinancing the 2s and 3s, you're locked into that. You can't just pick up and go buy something else. So that interest rate lock-in effect is real. And it hampers our ability to get new supply onto the market. Traditionally, you've got a family who's going to upgrade homes, but now when you look at the numbers for the past 18 months, it just doesn't make sense. Logistics, financially, not plausible. So that's just but then you couple that with the relocation and we see that influx, and then we just have a demand is too great to cover the supply, right? So we're building as quickly as we can. We've got new developments, but again, during COVID, during the inflationary period we just came through, a lot of the builders pulled back, rightfully so. They were terrified about their margins. So we've got that, kind of missing new inventory that should be on the market that hasn't been there to kind of absorb some of this demand. So we are still constrained with the limited inventory. And that's kind of what, only way to get out of that is as rates come down, we can see some of these families start to kind of unlock that interest rate effect and now make that transition into another home. Payment might be up some, of course, but it's not double what it was 6, 12, months ago.
Right.
And additionally,
let me ask you this, dude.
the third factor is the investment side, right? You've got all social media, everybody has owned real estate. So now we're seeing a lot more consumers who are deciding to purchase a new home, who are also retaining their current home as an investment. So that again, kind of exaggerates that supply demand imbalance.
Yeah, it's crazy. The inventory issues are basically directly related to interest rates in the sense that people aren't selling their homes because, and I just looked this up and wanted to Google it because I saw this the other day. So 62% of homeowners right now have a rate that's at 4 or below. So do you really want to buy another house at 6.5 when you've got one at 4? You know what I mean? But where do you think there's like a magic? Where's that magic number where you'll start seeing those sellers start selling? Do you think it's like 5.5, 5?
I think 599. I think having that 5 as a first digit is mentally just really changes that that mindset of somebody, especially if they're in their 2s or 3s, maybe the 4s. Okay, a 5's not too bad, but I mean when you're talking a 6 and a 7 and for a couple weeks there an 8, it's just nobody's interested.
It's a hard pill to swallow.
Oh yeah, I think quarter 3, quarter 4, all these different studies, 80, 90, 92% of just individuals think now is a terrible time to buy a home. And of course, 96% of stats are made up on the spot or 86%, whatever. Right?
Did you just make that up, bro?
but that's the reality is, you and I, we're getting calls from anybody, just from people, and then we're showing them numbers and it's just, they're balking. You can't blame them. Right. Yep. So I think we get sub 6s, we're going to see a lot more action. And if we can start to kind of get those sellers to kind of make that jump of, okay, let's time, we've waited. All this demand that's been building up for the past year, we can start to kind of unleash some of that. Then I think we'll be in a much better market inventory-wise, more options.
Yeah.
But I think in the 5s. And I think we'll be there this year easily.
Yeah, I think we're getting there. I mean, we haven't really seen a whole lot of movement in the beginning of the years, but I suspect at some point in the spring, and this is just me speculating, dude, and I really don't know. I mean, I know how interest rates are, derived and all that kind of stuff, but I mean, even the people like Barry Habib who get paid to predict this stuff are wrong most of the time. So, and
Yeah,
he got hammered this year because he was
yeah.
he was wrong a lot. And
He's
this dude is
he gets
the
knocked
most
down.
well-known, highest paid interest rate guru in the business, and he was wrong most of the time this past year. So I don't know, bro, but I do believe, truly do believe, with it being an election year, with we finally, the economy starting to kind of get a little bit better, so we can hopefully, the inflation's easing a little bit. So I don't know, 5.9 sounds definitely doable at some point, like second quarter of the year, if I had to guess. So I'm
I
hoping
think
so,
we're too.
dude.
Yeah, yeah. It's a regards to Barry. I mean, I couldn't have imagined a worse position to be in his role, where he
Yeah,
needs to sell optimism into what we
it's
just went
crazy.
through. That was unprecedented, right? So, yeah, but we all got burnt a few times by by a few of his calls. But granted, some of the economic data points that came out were above and beyond what anybody truly expected. I
Yeah,
mean, even Market Street, Wall Street, all of them, everything, kind of caught everybody off guard. So I think we're going to start seeing, it's all baked in right now. The Fed's expected three, maybe five cuts. So that's going to happen. That's going to start to drive it down. But
yep,
the biggest thing is we've been waiting for is the cracks in the jobs report. Inflation's been coming down. We've been seeing that for the past couple of quarters. But the jobs just stay strong, and there's so much manipulation, and you can, that's a whole different conversation between how they're presenting these numbers and the actual reality, and how they're actually updating the numbers 30, 60 days afterward. And for the
yep,
past 12 months, they've been revised downward. So it's manipulation at its finest, right? And there's
yep,
powers to be who allow these. But there's plenty of economic concern out there, and as long as there's any kind of risk, we're gonna see the Fed start to cut, and that's gonna
yeah.
bring interest rates down.
Let me circle back to the jobs thing. So, for people that aren't in the know, what's the benefit of the manipulation of the jobs numbers? What's the benefit there for for the Fed? I guess, the federal government, the Fed, whatever you want to call it. What's the benefit there for them? Why would they do something like that?
That's so. This whole thing started with the word transitory. Transitory was the
Yeah.
word of 21,
Uh,
22, right?
yep.
Inflation was transitory. It's temporary because of COVID, because of supply chain, all these things. It turned out they were wrong, and they had freely admitted that they were wrong. So if they're going to admit that the jobs reports are collapsing and that we're seeing unemployment spike, well, then they can't acknowledge that they have a soft landing, as they say. Whereas you're raising interest rates to curb inflation while still protecting the economy without seeing mass unemployment. Because if you start seeing mass unemployment, then they basically crashed the economy in the form of raising
Right.
interest rates. They made the mistake of waiting too long to raise rates. And if now by protecting a weaker job market, then it fits their narrative of them threading the needle, if you will, of curbing
Yep.
inflation while hitting a soft landing, aka a continuing a upward economy. If you but you dive into them, there's again manipulation. They look at job starts, but the sad reality is everybody with inflation, the amount of individuals who now have two jobs is hitting
Hmm.
highs as opposed to, and those numbers are being added in as true new starts. It's not new starts. You're talking people
Right.
with two or three jobs. You're talking
People, yeah, getting a
retirees.
side hustle. Yep.
Yeah, you're talking retirees who Social Security or pensions are not supporting them, who are having to go back and get
Right.
part-time jobs. Right? These
Yeah.
aren't working class 30-year healthy 30-year-olds that this is just it's just how you view the
They're
numbers.
just, yeah, they're people that are already employed that are being kind. It's basically like being kind of twice. You know what I mean? So,
Right.
yeah, it's, dude, at this point in my life, I don't trust any numbers put out by the government. You know what I mean? I know how to use them and know what they mean for the most part, but doesn't mean I have to believe them. You know what I'm saying?
It,
So,
exactly.
um,
You got
but
to see
yeah,
the big
dude,
picture. And so
yeah,
I think as as this is becoming more apparent, student loans. There's those just came back into repayment in October.
yeah.
That's
Don't remind me, bro.
there's
Yeah,
yeah.
yeah,
So
yeah.
we've already got a average home that's living paycheck to paycheck, and now we're adding on another debt on top of that.
Yep.
Credit card APRs, credit card debt's alarming. The rise in the Fed rate is directly correlated with the rise in the APRs on credit cards. So now
Yep.
you're sucking
Absolutely.
even more from the average household.
Yeah.
Now we're going to
Let
throw
me,
student loan
let me just
funds.
want to, I want to add something in real quick while you touched on the Fed funds rate. So a lot of people, correlate the Fed's fund rate with mortgage rates. When actuality, it's really those short-term interest rates that get messed up the most, like the credit cards, the loans, all those type of things. It does now, look, the Fed funds rate doesn't have like a direct correlation with mortgage rates, but typically when that goes up, so do mortgage rates. But the biggest thing is your short term, like your credit cards, your personal loans, that kind of stuff, which that has a huge impact on middle class families where I mean you're talking like 34% on some credit cards right now, which
Oh,
is
yeah.
insanity, dude. You can't get out of that hole if you're paying the minimum payment. You're just not going to do it. not
It's
not in
predatory.
your not in this next 2 decades anyway.
Absolutely.
So
Yeah. Completely predatory. Auto loans, everything. That's why the auto market's taken a massive hit. Right
yeah,
during 20 and 21, I think for the first time in history, used cars appreciated. It made
that
no
was
sense.
yeah. My sister-in-law is in the car business, and she works for a subprime auto finance, and they were just, I mean, raking in the money, dude. It was insanity, dude. I had people calling me from the dealership, you want to sell your car? I'm like, wait, what's it worth?
Yeah.
you know, I bought it for like 7 grand less than that 7 years ago.
Yeah. Makes
So
no
it
sense.
was crazy. But yeah, I think it was all kind of like a cyclical thing. Like we all had really good 21 and 20 and 21 and some parts of 22. And then boom, dude, it just kind of all came down. I mean, it was bound to happen. It's just a matter of time.
Correct. Yeah. House of cards you can use. I try to be more of a realist with the market, not so much a pessimist. But I mean, when you look at the credit card debt, when you look at the student loan debt, when you look at just the cost of homeowners insurance, the cost of groceries, it's it's scary. It's a scary time, and a lot of people are struggling, and
Yep.
it's just something has to give. But there's going to be cuts. That's going to help affordability. That's going to allow businesses to kind of go out, hire more, rebuild, grow instead of consolidate. But if you look at just the equities markets, the amount of IPOs is down double digits, if not triple digits, just because of nobody can raise money in this kind of environment. So as they kind of shine the spotlight, if you will, on these concerns of the average American, hopefully they're gonna, bring the cuts in and then kind of help stimulate some more. Not necessarily go
Yeah.
cut out checks for everybody again, but then that's the fine line is our budget is that goes into a deeper conversation, value of the dollar, et cetera, et cetera.
They
But
they they ain't ready for that, Lance. They ain't ready for that talk yet. Um I will say this, man. I do agree with you. Rates will be lower today or lower at the end of the year than they are today. What's your prediction? Like we're talking December 31st, 2024. Where are we
I
at?
mean, if we can be upper fives, honestly, low six. I want something more stable. Really, okay, mid fives, upper fives. I would prefer stability over the
Same.
insane volatility we've been going through. There's
Yep.
nothing more frustrating for somebody who's trying to be into the home buying market, and everything is just changing week to week on them. And budgets, it's just frustrating. We can get some kind of stability, but a nice declining stability, that'd be ideal, right? That kind of gets people in a position, gets them comfortable, gets them established. 12 months in, refinance, right? Whatever the case may be. It's not going to be that easy. There's going to be a lot of movements. Again, presidential election, so something's bound to happen, right?
It always does, bro. Always
so,
does.
but
It's every
what
4 years something happens.
yeah, what I've learned about rates in 2023 is nobody has called what just happened, and
No,
you can make your own predictions, but everybody was wrong. Nobody expected us to go anywhere near the eights. That I took seriously anyway, and
yeah,
but it happens. And
it happens, dude. This is, when we got in this business in 2017, we thought that was tough, and then this year happened.
yeah,
So, I mean, it's been crazy, dude. But at the end of the day, dude, I think you're right. If we can get like a slow decline and we end up somewhere in the high to mid fives, We'd be golden because I think if we're anywhere, if we're in the fours or something like that, dude, I think all hell's broken loose at that point.
Agreed.
And I think it's going to be it's going to be insane again. I don't even know what's going to happen, dude. It could be like Armageddon. I don't know, but
Well,
I hope the
I still have
slow.
conversations, and people still think that they're holding off for the twos and threes again. Like they think that's a normal
That's not
cycle.
going to happen.
Correct.
You can hold me to that. You will not in my lifetime, you will not get an interest rate in the two unless you pay for it. Like just forget about a two. And honestly, threes are so far off right now. Like
Right.
you ain't gonna
Oh
see a
yeah.
three for you might be able to creep into threes like 5 years from now. I don't know, dude, but it ain't happening anytime soon. So
People
the interest rate
people need to
market
understand,
and
if
it's
we get
cyclical.
into the threes, it's pain, right?
Yeah,
The
yeah,
reason we're going into these
exactly.
super low interest rates is because there's something very wrong with our economy. This was COVID,
Yep.
everything's shutting down. So we would have to experience some pretty severe pain for them to cut to where
Yeah.
we're back at that point.
Yep. Cheap housing is something went wrong. So, cheap interest, it's just how it goes, dude. All right, let's transition from interest rates to we do have a lot of different industry professionals. I say a lot. There's like, single digit people that listen to this. So, from different industries, but you're an interesting case, man. So like I said, we talked about you and I both starting around the same time. And I left Nations in 2019. So when I left, you started. I mean, you had like almost like a meteoric rise, like a rock star, bro, to your production and your business. And I was just curious because I mean, I know you pretty well in terms of like your personality, and our businesses are totally different on what we base it on. So tell everybody like how you run your business, how you built your business. Give us some details on that, man, because I'm actually really intrigued because you have that, like we're talking about, you have that very numbers brain. I have the creative brain, and we build it differently. But you're definitely a more of a numbers guy. You're an engineer, so tell us how you built it. What's some strategies we could use, that kind of stuff.
Yeah, I mean, I would say passion would be the number one thing. I just have this innate passion for what I do, for finances, and being able to kind of educate, right? But on top of that, like number one attribute I would honestly say would be organization. I mean, that's what I preach every LO that I've kind of trained up. Organization, it starts there. It starts with just a clean email, clean folders. Everything has to be organized. Excel sheets, so it all starts at that basic fundamental level, and it starts when you're at the very beginning of it. It's very difficult to retrain your system for that, is what I've noticed on a couple, seasoned LOs who joined over. So starting very fresh with a process and building it from the ground up. Beyond organization, I mean communication. I'm the kind of personality where I can't let a text go unanswered. I can't let a phone, call go uncalled back, whatever, return. It's just how I am. I like to help people, right? I like to serve. So that in itself is very important in what we do as sales, right? Communication's got to be everything. How I guess I really started growing my business was I really put a focus and emphasis on going after the listing agent on a transaction that I was working with. And it
Beautiful
goes back to
strategy, bro.
communication.
Beautiful.
Yeah. Oh, yeah. So, appraisals in. So mentally, when an agent or a client hears appraisals in and made value, or, we're funded, give them the keys. I want to be the first person to tell everybody those, because you get that endorphin rush. And I'm the one who provided that news. So that is huge. The follow up with them. Hey, you had a great, experience with how I communicated, and it was me. It wasn't a processor, etc. Give me a shot. I told them, I know you've got one or two great lenders. Put me as number
Right.
two or three. When they don't answer, give me a chance, kind of thing. So also during COVID, honestly, Nations, we didn't change our overlays, and during COVID, the crazy quarter one and quarter
Oh
two,
God, yeah.
yeah, a lot of companies, they stopped doing anything under 620, under 640, right? So
Yeah, I remember that. Yeah.
we stayed to 580. So I was getting deals from agents who just I'd never
Couldn't
even
find
heard
a
of.
home. Yeah.
Right. So just because they
Yeah.
heard that we were still offering that. So I was able to do that. But I mean, it really comes down to organization, communication, follow up. And the beauty of our job in our industry is you work as hard as you want to. Right. There's a lot of
Right.
LOs out there who want to, get in by, 9 or 10 and then be on the golf course by 3. So it's you get what you put into it.
Yeah.
I can't work from home. I come to an office every day. I can't do the whole work from home thing. Way too many distractions for me personally. So if I'm in the office, I'm here at 9, and sometimes I'm staying until 6, 7. Then that's what it is. I'm here to work. I mean, I guess that's kind of the overall. Well, one very important thing is financial literacy. I guess I
Yeah.
follow equity markets. I follow bond markets. So consumers, this is the largest purchase of their life. So having somebody who seems financially literate on the other side
Yeah.
does help build that level of trust, right? So I'm able to, by following and tracking, Barry, Harry, all these different resources we have, and keeping up to date with what's going on, you're able to convey that, and they can see that you are the professional in what you do, and I'm not just there trying to sell them an interest rate.
Yeah. So that's kind of what I figured your business kind of looked like, because you're detail oriented. I see Excel spreadsheets. I see
I trust.
very very streamlined systems,
Yeah.
and then I also see you explaining to the buyers how the process works. Hopefully, in less in layman's terms, because when you talk to me, you make my brain hurt. And I mean that in a good way, dude. I mean that in a good way. So like we were talking about earlier, dude, like there's not one way to run a business. That you
Absolutely.
have to play to your strengths. If your strengths are numbers and organization, use that to your advantage. Use that follow up that you were talking about with the listing agent. And for realtors, it's really more or less treating your business like a business. And I learned that the hard way. Like I would just kind of part time it for 6 months at a time early on in my business. And you know what? That's when we all get on that roller coaster, bro. You
Right.
know what I mean? You work hard for 6 months. So if you're just consistent with it, find what you're good at and do that, rinse, repeat, and dude, you'll have success. I mean, you just have to be consistent, put in the work, and at the end of the day, you'll see those numbers. You'll see, those goals. And if you don't hit them, call Lance. He'll build you a spreadsheet and tell you how to hit them.
You nailed it.
Um,
Consistency, man.
it's it, consistency. So, my word for this year is discipline. So I'm basically just gonna do what I said I'm gonna do, and I'm just gonna be disciplined about it. I'm gonna do the things that I said I'm gonna set out to do, and if I do those things, dude, I should have a pretty good year. So that's the way I'm rolling this year, man.
It's exactly right.
But all right, dude. So we got a few minutes just to kind of wrap everything up. I want to know. We usually do market predictions. We kind of already did that. So I want to know what Lance LaGarce is looking forward to the most this year, man. Like it could be anything. Like it could be, rates coming down, which we already talked about that. But what are you looking forward to the most this year? What's got your interest peaked?
I mean, professionally, industry related, I am more excited than anything about the middle class, the civil servants, the teachers, the police officers, the firefighters, being able to afford a home again. Because
Yeah.
this past year, with rates where they've been, it's been unfortunate. It's just unfortunate. Affordability has been shot. As rates come down, and ideally in Texas, again, it's kind of geographically part of this, but insurance in Texas has, I think, behind Florida, been the worst in the country. So all of these kind of factors have made affordability just shot for the
Yeah.
middle class. That's what I want. I want the middle class to be able to afford a home again. And so if we kind of start to see some more inventory to kind of hit that equilibrium with the supply demand curve, then that's very plausible, right? So that's what I would love.
I mean, dude, that's pretty awesome. I never, middle class. I would consider, most of my family middle class. So yeah, I would hope that that happens, dude, because I think that's the people that have suffered the most over the last couple of years. That's the people that are struggling to pay their bills and that are trying to buy that starter home but can't because insurance, interest rates, taxes, all the things are just going against them. So
Right.
I will second that motion for our middle class to get some relief, man. That's awesome, dude. So I really just wanted to thank you, man, for coming on and dropping your knowledge on us. I will get all of your well, I know you don't get on social media very often, but I'll get all your social links, your website, all that stuff. I'll put that in the comments on both the YouTube channel and the podcast site so that people can get in touch with you, can do that. And then man, if you need somebody that's really good at loans in East Texas and Houston area, holla at my boy Lance, dude. He's one of the best. That's why I have him on here, dude. So Lance, appreciate you coming on, bro.
I appreciate it, man. Good luck in 2024. It'll be a good one.
Yeah, I hope so, brother. Same to you, man.
All right, take care.
All right, let me get this stop.
All right, yeah, that's the first time I've ever done one of those. Okay.
You did good, bro. You did good.
I ramble.